Hi, so we'll be continuing our discussion further on primary markets, and I have Krishna once again to talk, on the same topic. Krishna, welcome again to FinTalk.
Hi Rahul, thanks.
So, continuing with the discussion where we left. So, what do you think should one consider, right? What kind of due diligence which a person should do when they're looking at a primary market IPO?
So Rahul, you said the word. I think in any kind of investments, I think due diligence is must. So if you're investing in primary market or secondary market, due diligence is a very important aspect of any investment.
Okay.
So how to do due diligence in primary market? I think if you always see there's a red herring prospectus available at the SEBI website for the companies.
Okay.
For the companies which have issued their shares.
Sure.
So one must always go through those companies, those prospectus before investing, understand the business model of the company, and then only go and invest in the company.
Okay.
Rather than, because what happens, Rahul, generally primary market get active in the boom time.
Right.
Because companies want their valuation to be very high or right sometimes,
Right.
depending on the company's agenda.
Sure.
So as an investor, we should always study, we should always understand what valuation the company is giving the stocks, and you should always understand the business model by reading the red herring prospectus.
Plus, I think it's more of business models which are available during primary. As you mentioned, secondary has a lot of data. For secondary stocks listed, there is a lot of track record data. You can look at P's and all those numbers. In primary, all those things are missing.
And I think red herring prospectus is the only key to go and read. And sometimes good analysts also come up with the reports on the companies, how the performance is.
Okay.
So I think that is also one way to understand if they want to understand in gist about the companies.
Sure, got it. I think it's a very valuable information, Krishna.
Yeah.
Very interesting. So now I have one question for you here. So tell me now, I have done all my due diligence. I have identified a successful script and I have applied for that, script.
Yep.
How do I ensure allotment? What is the logic there?
So very interesting. Also, as I was mentioning earlier, in primary market, number of shares which are issued is always limited.
Sure.
And sometimes the demand is very high.
Okay.
So issue can get oversubscribed, as I was mentioning earlier.
Yeah.
So there are three categories basically when you apply in the IPO, which is QIB, NIA and retail.
Okay.
I'll try to explain you with a retail category, I think, which is very valid for our audience also.
Yeah.
So if you see the retail category, I'll take an example. If a retail category has 500 crore, and you are applying for 10 lot, so in retail you have to apply in multiple of lots.
Okay.
And the issuer give you that what is the lot size.
Okay.
So if you're applying for 10 lots in retail category, an issue is of 500 crore, and it gets subscribed 5,000 crore.
10 times.
Then you will get only one lot.
Same proportion. Okay.
And if you get 5 times or 2,500 comes in that, you will get two lots.
Okay.
Or 500 ka 500 ho gaya, so you will get only one lot.
Okay. And
this is how it is.
There could be a possibility that 500 ka 400 hi hua.
Yeah, so according to ratio mein you will get this thing, but it will be in multiple of lots.
Got it. Okay, Krishna, now share some gyan with us in terms of how to be successful in primary market investments. What are the factors you think one should consider?
So I'll just tell you what are the factors which determine the primary markets. I think that is very important to understand. If you see structurally, the primary market has limited number of shares. When company is issuing the shares, the shares are limited, and it is divided into 2-3 parts like HNI portion, QIP portion, and retail portion.
Okay.
And then they go out and
mostly oversubscription and all those.
And there's anchor also, which is pre-IPO.
Okay.
So there are 2-3 factors. So this is very clear that the number of shares are very limited when companies are coming and issuing the shares.
Okay. It is deliberate or it is how it is?
No, it is. I mean, this is the number of shares they have decided, and sometimes demand is very huge. And stocks goes into oversubscription mode.
Sure. And
majority times stocks goes into oversubscription mode.
And companies would want oversubscription, right?
Exactly.
Because they want popularity.
Because they come with a cheap valuation also generally. Generally, when company comes with the IPO, all the lead managers they try to get the price right, or sometimes below the valuation, so that it is attractive for all the investors to come and invest and make sometimes short-term returns also.
Got it.
Yeah. So this is how. So these are the factors are very important. The oversubscription factor is very important, and when the stocks get listed, I think then the real value is aligned with the markets.
Okay.
So sometimes you miss the opportunity. Or you have sometimes a short-term goal for the stock. Even that can be fulfilled in the primary market.
Okay, got it.
Yeah.
So let me move to the next question now. Should an investor hold on to a stock after listing, or what should be the approach?
See, ground rule of investment is very simple. It has to be always fundamental of the stock, a fundamental value of the stock. So sometimes what happens, due to oversubscription, stocks get listed and they're listed at a high price. But when your goal is achieved of valuation or fundamental of that stock, I think you should exit.
Okay.
And if it's not, then you should hold on. I think this is the clear strategy when you invest in the primary market.
Okay, got it. It was a very insightful discussion, Krishna, and I think for our listeners, they would gain a lot of insights about primary markets and how to be successful in primary market investments. Do you have any last minute advice for our listeners here?
So my last minute advice would be simple, which I have also told in my your question and answers, that always invest with a fundamental thought. Read all the valuations and fundamentals of the company, and then only go and invest.
And have a stop loss or have a goal in mind when you're investing.
Yeah, have a goal in the mind when you go invest.
And when you achieve your goal, exit out.
Exit.
Don't be too greedy.
Then don't be too greedy. That is clear rule.
Sure. Thanks a lot, Krishna. Thanks for coming. Thank you guys for patient listening. So here we come to an end for this podcast. Stay tuned. We have some interesting topics coming in the subsequent weeks, and we look forward to your feedback. You can suggest topics and we'll try and cover them in the next episodes. Thanks a lot.
The details and investment tips expressed by the expert in the podcast are his personal views. We advise you all to check with your certified financial advisors before taking any investment decisions. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.